Good evening, everyone. Time for another silver update. This is the gold silver ratio provided by netdania.com. You can click on the link below. And I've overlaid the silver chart on top of this chart. This is a new chart for me. I haven't seen this on NetDania before, and I just wanted to do an overlay to do some interesting comparisons. Now, the black is the price of silver, the gold is the gold-silver ratio, and the first thing that really stands out at us here is the Buffett buy. If you remember, Buffett announced that he was buying roughly 100 million or so ounces of silver, and you can see that resulted in the 1998 spike, and that also was the beginning of this very large increase in the gold-silver ratio. So you can see we ran from about 41, 42 all the way up to this high of 80, and then that was the point in time when we got the beginning of the 2003 rally of silver. That was the breakout. It wasn't a breakout of the Buffett high that actually came all the way in 2006, but it was a breakout of this long consolidation point here. And you can see that the gold-silver ratio started a very serious decline there, where we got down to, again, that 40-something level. And silver was consistently rising until we got to this very critical point here. This was the Bear Stearns top. That was the $21 price in silver, and you can see that marked the turning point. Now, that was a very important inflection point. If you remember, Bear Stearns had a couple of hedge funds that had to be separated and went under because of derivatives, and then they ended up pulling the firm under, and we know that Bear Stearns was very involved with the silver short. So this was the key point in time. Jason Hummel at that time sent out a missive about this, and the weekend that Bear Stearns was collapsed by the Fed and other organizations in New York, the silver, physical silver, became unavailable at that point, and there was a huge disconnect between the paper price and the physical price. And now we can see that that was a turning point, a very important turning point, where the gold-silver ratio simply exploded to the upside and reached again that very, very high 80 point. Then we had the bottom of the financial crisis, because that resulted in a financial crisis, and silver hit that $8.50 level. And you can see from that point we actually had a tremendous bear market in the gold-silver ratio, from the 80s level all the way down to 35 or so. And then we got the smackdown of the silver price, and then a big recovery in that ratio back up to about 60. Now you can see here, it's interesting that we have this touch point where silver finally bottomed. At that point when silver bottomed, we began to decline in the gold-silver ratio to where we are today at roughly 50. Now I've drawn in, I had that drawn in, actually I need to draw that in. 50 is going to be a very key point here that we want to watch, because that 50 point seems to be kind of a pivot, and you can see that in the past, the dip below it, some dips there, the Bear Stearns dip, and the crash through it and subsequent rally. We're now approaching that 50 ratio, and it's my opinion we're probably going to go lower. So the main takeaway is that the Buffett rally in the gold-silver ratio resulted in an 80 price, as well as the Bear Stearns takedown resulted in that 80 price. But you can see now the bounce has come off about 57, 58, and we're turning down. So what does that mean? I can't tell you. I really don't know. all the implications of this. This is the first time I pulled up this chart. It's the first time I've seen it on NetDania, so you figure it out. Now, I want to pull up the most important chart of the night, and we're going to go into that when we go into the story of the night, but first I want to get to the questions. But we're going to pull up the US dollar, Iranian Rial. I'm sorry, I pulled up the wrong chart here. That's the Iraqi dinar. We want to go to the Iranian Rial, and you can see here that we're pegged at that 12,000. Actually, we've been pegged since roughly, and we're going to get into this, the Swift lockup. We've been pegged at that same price, and we're going to get to that in a bit here. But let's look at the questions of the night. I'm going to go through these fairly fast. We have a lot to cover. The first one is from Just Us Romney, the scapegoat, tinfoil hat time, Brother John F. Humor me and go along with the idea that presidents are first picked for us by their corporate sponsors and elite, and then presented to us, and then the mainstream media helps us pick the right answer. If presidents are guided there by a benevolent hand from above, and Obama was given to us as the antithesis of Bush, Romney seems like a perfect guy to stick in there just before they pull the rug out from under us, a perfect scapegoat to ensure that we never have that pesky capitalism again. I can already hear it on CNN. Well, ladies and gentlemen, the one thing we do know for sure is Romney was a capitalist, and capitalism fails and should never be attempted again. In serious news, Lady Gaga. So, good question. I'll have to say that we're set up probably for a swing to the left, and the reason I say that is because the right really has failed to control the Republican Party, whether that's libertarian faction or whatever you want to call the right. I'm talking about the free market right, the people who believe in free markets, and they were opposed to the Wall Street bailouts. You can't have capitalism when you don't, as Jimmy Rogers has pointed out so many times, you don't let the failures go bankrupt. So the capitalist argument, it's certainly clear that the Republicans were not willing to make the capitalist argument because they should have allowed the banks to collapse. Now, if you remember, I think Bush said something to the effect of, we need to destroy capitalism to save it, or something like, some crazy statement like that. So it's clear that the right, the pseudo-right we'll call it, was not willing to allow capitalism to go its course, and that would have been the collapse of the banks and their assets taken by others and reformed. So the left is going to win that argument because the capitalists didn't stand by their guns, and if there were any at all. Next question, Canadian Wildlife Series. This is from 4 Ounce. Hi, Brother John. Picked up a couple of Canadian antelopes today at my LCS for $38.25 a piece. Also have some grizzlies and cougars. Wondering if you like the new coin and if you still feel the series will be likely a good value going forward. Thank you for all you do. Provide silver for the people. Now, I researched this a little bit. The RCM Wildlife Series is limited to 1 million per coin. That doesn't necessarily account for the success of the wolf and the grizzly, which are pretty high premiums compared to the other series. So I can't really tell you why that's there, but if you think about it, and I don't prefer the RCM, two of the big reasons are they come in these 25-ounce tubes, and in those tubes and putting them into those tubes, they jangle together, they get scratched. And the other issue is milk spots, which has been a fairly frequent complaint from the RCM. So those two issues mitigate against this, but if you're willing to overlook those two issues, if you just think about the raw numbers, $38 times 1 million, that's $38 million worth of each of these coins. So no matter how you slice it, $38 million worth of something is a very, very small amount, and I think that ultimately, in the long run, numismatically, 1 million is just such a small number when the floodgates open and people flood into physical silver that probably everyone who's buying these RCM series is going to win. And next question, next house bubble. This is from Gasaras. Hi, Brother John. I wonder your opinion on this thought based on the article End of the American Dream. Buying a house with the bank's money now, cheap one for investment and rent as an option. Before they start printing and injecting would be okay. Considering they're creating again the bubble, or would it be too risky? The fact that makes me think this way is because if I pull my money out of silver, I can't go any further. I put all my money in silver, can't go any further. I'm still thinking the way to pay a 5% loan, which I'm qualified for, which should be the bad side of the situation. Any better option you could suggest? Well, again, I can't give financial advice, but I will say that with the financial repression that we're seeing from a lot of anecdotal stories that I've seen, you have a lot of second and third generation households where they're now piling into the same house. You've got a perfect situation for that, where you had the oversized overbuilding of the U.S. housing market. There's a lot of 2,000 to 3,000 square foot houses out there with 4 and 5 bedrooms, and it's quite possible that the family size could grow and they could compress into these houses. That's going to be a huge cut and hit on the housing market. So, in my opinion, if you don't see a return of incomes, then it's highly unlikely you're going to see a return of the housing market. And last question, silver, gold, or both? And this gets to that silver-gold ratio we were looking at. This is from PLSHI. It appears that the economic situation around the world are seriously getting ready to boil over. I have been stacking silver for some time now and accumulated a respectable stash. However, with that being said, I recently retired and I'm feeling that I need to increase my holdings in the precious metals to protect my family and myself. I currently do not own any physical gold, only silver. What are your thoughts on the diversification between gold and silver within an individual's precious metals holdings, and what would be your thoughts on the percentage of each? Well, I tend to be in his camp, holding the majority of silver. I took down that gold-silver ratio for the Rial, but if you remember that chart, let's actually just pull that up real quick. The gold-silver ratio has gone from that high of 80 and has gone down as low. I think the number was 35, almost 30. So you can see that we've had some very violent swings. A lot of people have recommended that you trade the gold-silver ratio. At this point in time, you wanted to pick up a bunch of silver, and you could have probably swapped it here. And if you're just swapping, I don't think there's any implications as far as taxes or anything else. You're just playing the gold-silver ratio. I personally believe that based on this chart, we're not going to have the same rally we had in the past. We're actually going to decline from a lower level, and we're looking at the real decline of the gold-silver ratio. And I believe when we cross that 50 point, we're probably going to surpass these lows that we made in 2011 with the high in silver. So it's my opinion that now is the time to hold the majority in silver if you're playing that gold-silver ratio, and then you're going to be looking to swap. I think probably 10 to 1 would be a target. That's going to be off this chart. But if you end up seeing a 10 to 1 ratio, then that might be a good swap point on the gold-silver ratio. So let's get over the main story of the night, and that's going to be the Iranian Rial. And there's a story on Zero Hedge. There's a lot of stories to cover here. We'll start with the Zero Hedge story. Guest post: hyperinflation has arrived in Iran. As we have been actively warning for a few days now, Iran's misery index here and has now become mainstream media critical. Iran is accelerating towards significant regime volatility. It seems our note on hyperinflationary case studies and the blame and denial extension is particularly timely, submitted by Steve Clark of Cato at Liberty. Since the U.S. and the EU first enacted sanctions against Iran in 2010, the value of the Iranian rial has plummeted, imposing untold misery on the Iranian people. When a currency collapses, you can be certain that other economic metrics are moving in a negative direction too. Indeed, using the new data from Iran's foreign exchange black market, I estimate that Iran's monthly inflation rate has reached 69%. With a monthly inflation rate this high, over 50%, Iran is undoubtedly experiencing hyperinflation. When President Obama signed the Comprehensive Iran Sanctions Accountability and Divestment Act in July of 2010, the official Iranian U.S. Rial dollar exchange rate was close to the black market rate. But as the accompanying chart shows, the official black market rates have increasingly diverged since July 2010. This decline began to accelerate last month when Iranians witnessed a dramatic 10% drop in the value of the rial over the course of a single weekend. The free fall has continued since then. On the 2nd of October 2012, the black market exchange rate reached 35,000 IRR, a rate which reflects a 65% decline in the rial relative to the US dollar. So there's the chart, and you can see this chart up here. That's the official exchange rate, and this chart here is the black market exchange rate. And if you remember, if you've read Investment Biker and you're familiar with Jimmy Rogers and his tours around the world, the first thing Jimmy Rogers checks when he crosses a border into a country is he goes and exchanges some dollars at the bank to find out the official exchange rate, and then he goes to the black market and does the rest to find out what the difference is. That difference between the official exchange rate and the black market rate is going to be the way you determine how much repression is going on in that country. In other words, how much the government is trying to foist off its worthless currency on the people. This difference here is going to be equivalent of the misery index, because that's the government refusing to admit that their currency is declining and forcing the people to take the cost of that. And of course, then you get black markets. So let's look into the history of this SWIFT system, and we want to go back to the original article of when SWIFT cut off Iran. That was this article is March of 2012, March 15th, and this is SWIFT cuts off Iran as sanction vice tightens. Brussels, Belgium. Remember that. This is headline Brussels. Dozens of Iranian banks were blocked from doing business with much of the world as the West tightens the financial screws on a country it wants to prevent from developing nuclear weapons. Now, I'm not going to get into that debate. That is the stated reason. The Belgium-based company that facilitates most international bank transfers on Thursday took the unprecedented step of blocking 30 Iranian banks from using its service. The move is likely to hurt Iran's all-important oil industry and make it difficult for citizens to receive money from relatives living abroad. The move by the Society for Worldwide Interbank Financial Telecommunications, or SWIFT, is part of a broader effort by Western nations to isolate Iran financially and force it to demonstrate that it is not trying to develop nuclear weapons. Iran says that its nuclear program is for peaceful purposes, but officials in many other countries believe otherwise. SWIFT said it was forced by recent EU sanctions to discontinue service to the Iranian banks beginning Saturday. SWIFT is a secure private network used by nearly every bank around the world to send payment messages that lead to the transfer of money across international borders. The chief executive of SWIFT, Lazaro Campos, who's not the chief now, described the move as extraordinary and unprecedented. Quote, is a direct result of international and multilateral action to intensify financial sanctions against Iran, he said. There was no immediate reaction from the Iranian government, etc., etc., etc. So, That's the action that started this situation we're looking at. Now, a headline from today: Iranian riot police deployed in Tehran amid falling Rial. Iranian riot police sealed off parts of downtown Tehran and fired tear gas rounds after street protests triggered by the country's tumbling currency. More than 200 policemen were stationed yesterday around Ferdowsi Street, near one of the main areas for traders in the capital, and broke up groups of passers-by. They were also sent to the city's merchant bazaar after shopkeepers refused to open and trash cans were set alight in the streets. Quote, "The price of the dollar was unclear, so we went on strike and decided to shut our store," said Raul, who works in a wholesale food shop in the bazaar. "Shopkeepers didn't know at what price to sell their goods," he said. President Mohammad Ahmadinejad called for calm on October 2nd, blaming the weakening of the rial on foreign pressures. Iran's economy is suffering after the U.S. and European Union tightened trade and financial sanctions in the past year. The restrictions aimed at curbing Iran's nuclear program have limited the country's ability to sell oil, its biggest export, and other goods in return for currencies such as dollars and euros. Quote, "The fact that there are street protests was in many ways inevitable given that Iranians are essentially living in a pressure cooker," said Anush Etashami, professor of international relations at Durham University in the UK. Quote, "The pressure is inherently economic and affecting all strata of society." The Iranian people, quote, "will never surrender to pressure," Supreme Leader Ayatollah Ali Khamenei said yesterday in an address to a group of students, according to the state-run Fars news agency. Quote, "In the past 33 years, the Islamic Republic has been faced with a wide range of political, security, military, economic pressures and sanctions, but the Iranian nation has not only canceled these pressures, but also come out more powerful." So you can see that Iran has not yet bowed to this pressure. Now, let's take a look at this SWIFT system a little bit more closely. This is the website of SWIFT. SWIFT is self-described the global provider of secure financial messaging services. And you can see it's headquartered in Brussels, Belgium. And this is the executive committee. The current CEO is Gottfried Leibrandt. And you've got the rest of them listed here. Now, again, this is just me digging down the rabbit hole. I don't really know anything. I'm just looking to try to find some trails. One of the interesting things I saw here when I was researching, I always want to look at the background of some of these people, and you can see here that Gottfried, who's the current head of SWIFT, worked for McKinsey & Company for 18 years. If we jump over to McKinsey & Company, this is the Wikipedia entry on McKinsey & Company. McKinsey & Company, Inc. is an American global management consulting firm that focuses on solving issues of concern to senior management. McKinsey serves as an advisor to many businesses, governments, and institutions. It is recognized as one of the most prestigious consulting firms in the world, has proportionally produced more CEOs in large-scale corporations than any other company, and has been a top employer for new MBA graduates since 1996. So that's a peek into it. Now, if you go down here and look at the notable alumni of McKinsey, and this again is where the CEO of SWIFT came from, you can see McKinsey has produced more CEOs than any other company, is referred to by Fortune magazine as the best CEO launch pad. More than 70 past and present CEOs at Fortune 500 companies are former McKinsey employees. Among McKinsey's notable alumni are Frank Appel of Deutsche, some of the names here: Chelsea Clinton, daughter of President Clinton, Harvey Golub, CEO of American Express, Louis Gerstner, former CEO of IBM and the Carlyle Group, James P. Gorman of Morgan Stanley, Stephen Green of HSBC, Bobby Jindal, governor of Louisiana, and there's more here. I'm not going to go into all these. Jeffrey Skilling, former CEO of Enron, and you can research that. I'll put the link there. So, as George Carlin has said famously in the past, it's a big club and you ain't in it. So, right now, it's a very big club, and Iran is not in it. And we're going to see, I believe, very soon we're going to see, with, as I pointed out here, the currency of the Rial. We're looking at, let's go over to the zero hedge chart. We're looking at a 3-to-1 ratio of the official exchange rate to the black market exchange rate. So Iran may have bit off more than it can chew. We don't know what the reaction is going to be with China and Russia, and we really don't know what type of trading is going on that is not recorded by this SWIFT system. But it's clear that the fact that Iranians aren't able to raise dollars, they're not able to raise that foreign exchange, that the dollar is very important for Iranian economic trade, and it's clear that it's having a severe impact. So we're coming to a tipping point here, and there is a internal strife that's being forced on the government of Iran. Will they be able to quell that? Will they turn towards a non-US dollar clearing system? And will they be able to rely on internal trade to generate the things they need and be able to abandon the dollar? I really don't know the answer to that question. It's coming very soon. Now, the main point is going to be that these types of hyperinflations, this is kind of a not a mirror image, but a warning shot across the bow for any country, and I think the United States probably could be a country in the future that sees something like this. When other countries refuse to trade with you for your currency, then what that means is that your currency is going to come flooding back to the issuer because it's not valued overseas. And we can see what's happened to the Rial. Will that happen to the US dollar? It's a very serious gambit. It appears that Iran is the next player to try to break the petrodollar. Every previous attempt has failed. We don't know if this one's going to fail or not. It seems to be a gambit where they have bet everything on this, and that's the key issue we're looking at worldwide here, is this challenge to the petrodollar issued by Iran, and now we're seeing the internal collapse of the currency in Iran. If that happens in the future to the United States, where the petrodollar actually is broken, and we see a flood of petrodollars back to the United States, it's highly likely that we'll see something as bad or worse than what we've seen with the Rial, and that's really going to be the hyperinflation that we get. If we get that, you're definitely going to want to be in physical silver or physical gold. You're not going to want to be in dollars, because as you can see what's happened to the Iranian people, they've rapidly seen their savings disappear, their pensions become worthless, and everything they've done for many, many years has been a complete waste. So you definitely want to protect yourself just in case that type of scenario comes to the United States. I'm not saying that will, but it may, and if it does, you don't want to be in dollars. And we'll talk to you next time.